If you purchase general liability insurance from a non-admitted carrier, this video is for you. Hey guys, I'm Mike. Thanks for joining me on another video. Remember, please like my video, comment below, and if you enjoy my YouTube channel, if it helps, please remember to subscribe and hit that little notification bell so that you're reminded of any videos that we release in the future. Now, if you purchase general liability insurance from a non-admitted carrier, or in other words, the excess and surplus lines market, you came to the right place because I'm going to explain to you some strategy when you estimate your gross sales for your policy period. You may or may not know, but some policies are rated on payroll, on subcontractor costs. And what I mean by rating is that the insurance company uses the rating factor, whether it be gross sales, payroll, sub costs, and that's how they determine your premium. For the purpose of this video, we're only going to talk about gross sales. Gross sales is widely used in most industries. It's the easiest, in our opinion, the cleanest rating basis for your general liability policy. A couple things I want you to keep in mind. When discussing the rate, which is the rate that the insurance company uses for every $1,000 of sales, the rate makers understand that there are costs for you to do business. So that's why they use gross sales. When we talk to our clients, they always say, well, yeah, my gross sales are going to be $1 million, but I have all these costs of doing business. Doesn't matter. When the rate makers come up with these policy rates to determine premiums based on every $1,000 of gross sales, they understand that there are costs associated with you doing business. That's why they set the rate at a certain amount. So let's get that out of the way. The same rate is going to apply when you start the policy to the audit at the end of the policy. Now, when you're thinking about non-admitted insurance companies or the excess and surplus lines, consider the fact that your policy premium when you start the policy is considered minimum and deposit, typically set at 100%. So what does that mean? Let's say your rate is $5 per every $1,000 of sales. So your premium is based on $5 per every 1,000. Let's say you project out $1 million. You have a $5,000 premium. That premium is minimum and deposit. That means your premium cannot go under that amount, regardless of what happens at the final audit. Now, there are circumstances where your agent can negotiate the minimum and deposit to say 90%. So what does that mean? If you have enough premium or if you have enough sales, you could get 10% back at final audit. So let's say you have $10 million in premium, you have a $5 rate for every $1,000 of sales. So your minimum and deposit is $50,000, but it's at 90%. So that means that $5,000 could be refunded at final audit if your sales come in less than what you estimated at 10 million. Hope that makes sense.
I'm learning.
There's also another factor to understand, and that is there are minimum premiums associated with certain classes of business. You know, minimum premiums could be as low as $1,000, but you're typically going to find them to be around $2,500, $5,000, $7,500, $10,000, or for larger types of businesses or riskier types of businesses, we've seen them as high as $25,000, $50,000, $75,000, and $100,000. What does that mean? Well, regardless of how much you estimate your gross sales to be, you're going to have to get to that policy minimum premium. That's how much you're going to have to pay. Now, this gives some flexibility for companies where you might have a better year than what you anticipated, but your policy was still pushed up to that minimum premium. You have some room there for growth, which means that at the final audit, you might not have any premium due if you surpass the amount of sales that you estimated at the beginning of the term. Now, let's talk about some strategy, because people say all the time, well, I don't really know how my year is going to be. What do I estimate? Well, that's where you have to talk to your agent and think about how you want to go into your policy year. What is the minimum premium? What effect does my estimate have on my rate? And what I mean by that is, in some cases, when you estimate higher gross sales, your rate for every 1,000 could go down. And this is true for certain industries where carriers give you not so much a discount, but they're going to give you a better rate for every $1,000 of sales if your estimated sales are higher. Could be 5%, it could be 10%. Sometimes we've seen it as high as 20 or 25%, depending on the spread of gross sales. So consider that, talk to your agent about that. That could be a factor. But in most cases, it's not going to be enough of a factor for you to overpay your premium and then not get a refund at final audit. So what we say is you want to be conservative if you can, but you don't want to be too conservative where there's a gross negligence underestimating of your gross sales. And this does not happen often. This is rare. We have seen cases where we've had clients project out, estimate out gross sales way under what they did. They've had claims and the carrier decided to go back and void all their policies, refund the premium full. We have one situation where this person underestimated their sales, and in the fourth year, stayed with this carrier for 4 years. Basically, there was no coverage ever in place. Of course, we don't want there to be a gross underestimating of the sales. That could be deemed insurance fraud, so we have to be really careful of that. But let's say you're on the cusp, maybe you're going to do 3 million in sales, maybe you're going to do 3.5 million. Consider how that will affect your premium, but also consider how that could affect your audit. The difference between 3 million and 3.5 million might make a big difference up front. But if you estimate 3.5 million and wind up doing 3 million, if you have 100% minimum in deposit, you're not going to get any refund at the audit. So that should determine how you figure out going into the year. Now, if you're a newer business owner, definitely be more conservative because you don't know how your year is going to go. You don't really have anything to judge on. If you're an experienced business owner and you have history, I mean, chances are your years are going to be pretty similar one year to the next. You can look back at your P&L. You can look back at how your previous years went and kind of determine what you think you're going to do in the next term. So that's all stuff that you want to talk to your agent about. This is all planning that your insurance agent should be able to help you with. This is all information that hopefully you've been explained. If not, feel free to reach out to us. We love to explain this kind of thing to you. We have a lot of experience with non-admitted insurance carriers. We have a lot of experience in the excess and surplus lines market. We're in an environment where more policies are going that way because the standard markets have really tightened up their underwriting. They're accepting less risk, so that secondary market or the surplus lines non-admitted market is becoming more popular. You should understand how all of this stuff works going into your policy year so you're not blindsided while the policy's in place or at the end of the year at the final audit. You can reach us directly at 858-384-1506. You can email me directly, mike@foagency.com. Happy to answer any of your questions. Again, if you comment on my videos, I will respond to every single comment. And please remember to support our channel, like this video, subscribe to our channel, notify yourself of any future videos that we release. We hope this one helps, and we look forward to seeing you on the next one. Thanks again.